Hey everyone, welcome back to Corporate Decoder, the place where we turn confusing corporate documents into your next big stock market insight. Today we're diving into Saratoga Investment Corp and what their latest report might be telling us about their financial health. Now, this isn't just a quick update, it is a look at how the company is performing, and sometimes these reports can reveal a lot more than just numbers. We're going to cut through the jargon and get to the heart of what matters for investors. First off, for those who might not be familiar, Saratoga Investment Corp is a business development company, or BDC. Think of them as companies that invest in small and mid-sized businesses, helping them grow by providing capital. They're structured to pass through income to shareholders, often meaning attractive dividends. This report is a current report, which means it is for events that the company thinks are important enough for shareholders and the public to know about right away. They've announced their financial results for the quarter that ended in November of 2025. The core of any of these reports, especially for a financial-focused company like Saratoga, is always going to be the numbers. They're reporting on their financial results and condition. It is like looking under the hood of the company's car to see how the engine is running. Let's talk about their stock. They have common stock listed on the New York Stock Exchange under the ticker symbol SAR. This is what most people think of when they hear about a company's stock. But Saratoga also has different types of debt or notes that they've issued. These are like loans they've taken out from investors. For example, they have these 6.00% notes due in 2027, and these are traded too, often alongside their stock. They also have 8.00% notes due in 2027, and then even 8.125% notes also due in 2027, and their 8.50% notes due in 2028. These different interest rates and maturity dates show how they're financing their investments and managing their debt. It is a way for them to raise money to then lend out to other businesses. The fact that they have various notes with different interest rates tells us they are actively managing their cost of capital. When interest rates change, the cost of this debt can go up or down, impacting their profitability. And of course, all of this is happening in US dollars. That is the currency they operate in and report in. When we talk about stocks and notes, we're ultimately talking about shares and the amounts investors have put in and what the company owes back. The main reason for this filing is to share their financial results for the quarter ending the 30th of November 2025. They issued a press release, and that is what is being incorporated here. Think of the press release as the company's official announcement to the world about how they did. So, we're looking at information that was released on the 7th of January 2026. This is the key piece of information we need to focus on to understand their recent performance. Now, for the juicy details, as a business development company, Saratoga's success is really tied to the performance of the companies they invest in and their ability to generate income from those investments. They're essentially a middleman, providing capital and earning returns. So what does this tell us about Saratoga Investment Corp? Well, the fact that they're issuing notes with rates as high as 8.50% suggests they're either taking on riskier investments that demand higher returns for them to pass those down, or they are operating in an environment where capital is more expensive. For a BDC, the key metrics to watch are usually net investment income and total investment income. These numbers show how much money they made from their investments after accounting for their own operating expenses and the interest they pay on their debt. If their total investment income is significantly higher than the previous quarter or year, that is a good sign. It means the businesses they've invested in are likely doing well, perhaps growing or paying out more dividends. Conversely, if it is down, it could signal trouble in their portfolio companies or a more challenging market for those businesses. We also always want to look at their net asset value, or NAV. This is essentially the company's book value per S-share. If the NAV is growing, it means the value of their investments is increasing, which is a very positive signal for long-term health. If it is shrinking, it suggests their investments are losing value. The interest expense on their various notes is also critical. If interest rates rise generally, their cost of borrowing goes up, which eats into their profits, especially if their portfolio companies aren't generating enough income to cover it. They need to make sure the returns on their investments are consistently higher than the interest they're paying on their debt. Now, looking at these results more broadly, Saratoga Investment Corp operates in a dynamic market. Their ability to identify and fund promising middle market companies is their core strength. However, they face risks inherent in lending and investing, including the potential for defaults by their portfolio companies, interest rate fluctuations, and general economic downturns that could impact the businesses they support. A key opportunity for them would be if they can continue to originate new investments that offer attractive yields, especially in a rising interest rate environment where they can potentially borrow at lower fixed rates and lend at higher variable rates. Their strategy likely involves a careful balance of risk and return across their diverse portfolio. In this specific filing, while we don't have the full financial tables right in front of us here, the announcement of results points us to crucial information. The fact they are reporting on their financial condition and results means we should be looking closely at their income generation from investments versus their debt servicing costs. So, what is my take on this filing? Saratoga Investment Corp is navigating a complex financial landscape. Their success hinges on smart investment decisions and effective management of their debt. The key takeaway is to always check if their investment income is growing faster than their borrowing costs, and if the value of their investments, their net asset value, is on an upward trend. If those are positive, they're likely on solid ground. If not, it is a sign to watch out. Alright, that is our breakdown of Saratoga Investment Corp. Its latest report. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.